proud to say I think we've made some steady progress against what we'd committed to, and this is against a balanced scorecard of commitments. We look at 5 key pillars when we look at our performance, and that is company, obviously customer, colleagues, citizenship, and conduct. I think the first thing is we have grown our business in 2015, and we've leveraged our core capabilities during the year. And we're keen to be a major player in both the public sector as well as the private sector in funding those projects. Barclays in 2014 was the lead arranger of the country's sovereign bond, which I think you've seen the accolades in the international markets, was probably the most successful sovereign bond of the year, if not of the recent past. One of the things we wanted to look at was opening up new opportunities for growth. And we made certain commitments, which I will update you on now. The first one was to launch a separate standalone business banking unit, which we have done, because we felt that there was an opportunity to support SME customers. Investment banking was, again, another opportunity that we saw, leveraging off our strong investment banking experience and skills in the United States, UK, as well as in South Africa. And the important thing here is we now offer a holistic range of capital market solutions that many of our businesses, as they grow bigger, will be requiring in the future. In the last couple of months, we were particularly excited by 2 major achievements. I think the first one is that we were actually formally granted our bank assurance agency license. And I think this, as we said before, represents a new stream of income that previously was closed to banks such as ourselves. So by the granting of this license, we are now ready to grow quickly and offer a holistic range of solutions to our clients. More recently, we also granted a stockbroking license, which I think allows us again, as we help our clients go to market, to be able to access and provide service and solutions for our clients as we do so, in particular as they tap into the equity markets. Another area of focus was our fixed income trading. This business 2 years ago did not exist, and now we've got a proper fixed income trading team in place using cutting-edge systems to help us generate new business in this area. Last but not least, we've been looking very particularly at the value chain financing area, commercial property financing, and institutional banking to support our expanding corporate and business banking businesses. No business would exist without customers. And in this day and age, one has to be responsive to customers' needs, both from a service perspective and also from a product perspective. So we have focused very clearly around improving our customer service experience and having products that are relevant. And I'm glad to say we're making quite strong progress on this. There's always more to do. We recognize that. But we have a very clear service agenda. We are focusing on simplifying our services. One of the common complaints is that banking services are too complicated, too many papers, various long processes. We are focusing on simplifying those. And when we also look now at the product side, again, we've had actually a number of things we're quite proud of in the last year. We were the first company to actually launch a salary retrenchment cover that is included as part of the bouquet of the account services you actually have. This, in a time when a number of companies were going through challenging times, gives you that peace of mind that if you happen to lose your job, we will actually give you 3 months of your salary as you find your feet and get your next opportunity. That was a market first.
We did a 6% growth year on year, moving from 118 billion shillings to about 125 billion shillings as at 31st December 2014. I think looking forward, this in 2015, we will focus on the new centers of excellence, the mortgage business, asset-based financing, and indeed the SME sector. Moving to deposits, You can see we are reporting a 9% growth on deposit, moving from 151 billion shillings to 165 billion shillings. And the makeup of that, you can see 9% growth on the side of retail. On the side of corporate and business banking, 10% growth is what is being generated from that business. And I can comfortably tell you the business banking is contributing the highest of that figure. It's actually a liability-led a business, whereas corporate, you'll see, it's actually on the asset side. Moving to the balance sheet structure, you see total balance sheet of about 226 billion. And you'll see we are funding our customer assets, the 125 billion, using the 165 billion on the side of deposit, basically giving us a very good loan-to-deposit ratio of about 76%. Previously, in the previous period, that ratio was about 78%. Moving to the slide on capital, you can see our core capital ratios at about 18.7. That gives us a headroom of about 8.2% over the revised regulatory limits of about 10.5. And when you look at the total capital buffers, you can see at 18.6 gives us a buffer of about 4.1%. If I move to the next slide, which is on the quality of our asset book, you can see loan loss ratio of 1.1%, slightly increasing by 0.1 compared to 2013. But what is important on that ratio is that if you look at on the right side, if you look at non-performing loans, it's very, very low at 3.5%. That tells us the emphasis that the bank has in terms of the provision, the quality of the book. I think when we're lending, when we're seeing that growth on the asset side of 6% to 125 billion shillings, it's basically telling you that we are lending based on fundamentals and not, for example, on the security that customers provide. Our cost-income ratio basically coming down from about 53% to 52% in 2014. And this is reflective of the kind of investments that we're basically doing. We're able to support, the hire of quality directors, and at the same time be able to control our cost. And it's not a control story, but more of investing in revenue-generating, areas. When I look at, for example, the marketing budget, we've been able to increase the marketing budget to the tune of about 30%. But then you can just see that the cost story is a good story, basically coming down. And now moving to the slide that I'm sure everyone is interested, which is our profit for the year. You see profit after tax of 10% growth compared to what we had in 2013. We've moved to a profit of about 8.388 billion shillings as at December 2014. And just taking you through how we came up with that result, starting on the top in terms of interest received, basically growing by about 8%. If you look at on the side of government, in the side of interest paid, you basically see a growth of about 37%. Moving to net interest income, a growth of about 4%, purely because of the cost of funds on the side of interest paid. On the non-interest income, basically fees and commission, you see a drop of 4%. So that basically gives us a total income of 28.288 billion shillings. Cost, a drop of 6% year on year. Impairment is actually a growth of about 15%. This broadly will be reflective of what we are seeing on the asset side, of course, taking into consideration the repayments on the corporate book. If I look at then the profit before tax, 10% growth to 12.29 billion shillings, and then tax of about 3.9. Effective tax rate there basically will be about 32%.
I really want to reiterate the board and management are committed to driving sustainable growth in the future. That is, I think, the core thing. We are going to do it in a measured way, in a faster way. And we're really looking forward to now reaping from what we have invested here. We're committed to further invest, not just in systems, but in our people to deliver future growth. And as we do so, we are very mindful of our stewardship agenda. We want to try and leave things a little bit better than we found them. We will continue to invest and play our part in the community as we grow this great bank in the future.